Welcome back to Delta Code. I am Delta, an economist with over 20 years of investment experience both in stocks and crypto. And this is an exciting week for stocks. A lot of earnings from companies that are in our portfolio. A lot of the Magnificent Seven companies such as Meta, Apple, Amazon are also reporting this week, which is moving the markets in very violent, volatile ways. Microsoft and AMD also reported earlier this week. Most importantly, two of our biggest stock positions are reporting this week. This, of course, is Coinbase and Facebook Meta. Meta reported yesterday after the market closed, and it is up. We'll check it out. And today, after the market closes, Coinbase reports, along with Marathon, which is Bitcoin mining company, as well as Square, also known as Block, which has crypto components in it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
So this is the earnings whispers, most anticipating earnings companies that are reporting this week. As you can see, the week started off with McDonald's and some other known companies. We don't care much about McDonald's. We're more interested in high growth tech companies. So we will look at, starting on Tuesday, SoFi, PayPal, AMD, Microsoft, Pinterest. We'll take a quick look at Starbucks just because it's an interesting company that sells an addictive product, which is nice. Then we will look at yesterday's earnings for Meta, ARM, Qualcomm, Carvana. Carvana was on our list of heavily shorted companies, and it still is heavily shorted. It popped off after the earnings. And then today, these companies reported before the market opened, and then we're going to wait for these to report after the market closes. We will take a look at Amazon, Apple, Intel, Coinbase, Square or Block, Marathon, and also Mercado Libre. We have most of these companies in our portfolios, but also some of these we no longer have. We have had in the past, and we are keeping our eye on them to possibly add again on the weakness that the market perceives, despite the companies being fundamentally strong in our opinion. One of these is Pinterest. We've had Pinterest for a long time, but we have since sold most of our Pinterest shares, and we're looking for strength in Pinterest fundamentals and their financials that the market hasn't reacted to yet. Similarly, we are starting to take a closer look at Intel because Intel is one of few chip designers and manufacturers for both processors and graphics cards, and they're about to bring on their Arizona and Texas plants online later this year and start producing in 2025, which will eat into both AMD and NVIDIA's profit that are massive right now. On top of everything, yesterday the Federal Reserve had their meeting and the post-meeting press conference where Jerome Powell spoke about what they've decided to do with the federal funds rate. The federal funds rate is the rate that the Federal Reserve charges banks, and then that permeates through the economy and ends up what is the cost of money. When you go to borrow money for a car loan or for a house, the federal funds rate impacts that. Currently, the federal funds rate was held steady as it has been for the past many meetings, but the market is looking for the Federal Reserve to start lowering the interest rate on the federal funds rate. This will help a lot of companies and borrowers borrow money at a cheaper rate, which will grease the wheels of the economy. So far, no rate cuts. The market is expecting maybe 1 or 2 rate cuts this year, possibly starting in September. This is the federal funds rate. Historically, as you can see, this is where we had high interest rates because we had high inflation in the 80s, and the Federal Reserve was determined to bring inflation down and raise interest rates to almost 20%. Since then, it's been tapering down, and in the early 2000s, with the tech bubble, it was around over 5%, 6%. Then we had the 2007, 2008 financial meltdown of the housing bubble that crashed pretty much the world economy. And since then, the interest rate, federal funds rate, has been basically zero. It started going up to about 3% pre-COVID, and then it went back down to zero for the last few COVID years. And since we had, I think, 9, almost 10% inflation, official inflation, the Fed started raising interest rates, which are now relatively high in the past decade, but not really high relative to the history going to 1975. So maybe the new normal is actually around 5% and not the 0% we might have gotten used to in the last decade post-financial crisis. Additionally, with the federal deficit being so high that we are adding $1 trillion every, I think, 90 days of interest, perhaps the fiscal stimulus that is ongoing will keep the inflation higher than 2%, where the Fed can't really bring it back down to 2% as they are mandated, as they are trying to do. Anyways, the reason why the Federal Reserve communication and if they lower the interest rates is important is because when interest rates go down, usually asset prices go up. Means that there's more money in the economy chasing the same goods and assets, and that is usually good for risk on assets, which makes them more scarce. This will be good both for our tech stocks, which often will not be profitable, but will be borrowing money for many years until they really take a lot of market share. Example of this is Uber. Uber was running an unprofitable company, Tesla as well, for a long time, borrowing money that was really cheap down here. And then when interest rates started going up, they could not borrow money at a 0%. So when it's 5%, then it's time to start making some money and be profitable company. And both Uber and Tesla just flipped on the switch and started making money. This is why it's sometimes difficult to evaluate a high growth tech company, is because they might be running an unprofitable business at the moment in order to grab market share and grow their business, understanding that once they have a large market share, they'll be able to flip on the monetization switch. We are going to go from left to right, starting off with SoFi. We'll briefly touch on each company's earnings and how the market reacted. Overall, the market reacted positively to a lot of these companies initially, but since their earnings today, the market is giving a lot back, expecting the interest rates to stay high for longer, possibly no rate cuts, and because bonds are going up, the market might be signaling that something in the economy is going to break. The unemployment numbers are going up, and if the Fed waits too long and is behind the ball, like they were on inflation in 21 and 22, then something in the economy might break, which will lead to even more rate cuts in the future. If the economy goes into a deep recession, then the Fed will be forced to bring the interest rate back down to zero over time to help stimulate the economy and lubricate the wheels of businesses. As you can see here, the markets are mostly down. Only gold is up slightly, about 2,500, which is whatever. S&P 500 is down almost 1%. Dow is down 1%. NASDAQ 1.2%. Russell 2000 almost 3%. And oil is down 1%. Our portfolios are down about 4.5% so far today, which is not good. This is mostly because Coinbase is down 3.2%, and that's a big portion of our portfolio. As you can see, the rest of our portfolios are down pretty much across the board. Carvana is doing great, 10% up, but most everything else is down in mid-single digits. Intel is down, which is possibly an opportunity, as well as AMD. We will look at that later in the video. Meta is up, which is nice. So this is my buy in a crash portfolio, where I put in a list of companies that I think are worth buying if everything crashes. So you can see things like Alibaba, Applied Materials, Tencent, Micron, Microsoft, Pinterest, Meta, Google, Amazon, AMD, Coinbase, CrowdStrike. Possibly going to take this one off given their huge blunder that caused a worldwide operating systems crash that delayed a lot of flights, where I think airlines are going to sue them, so they're not going to be in a good position going forward for a while. Perhaps worth looking into their competitors like Okta or others. And then crypto, you can see here, is down almost middle to double digits, between 5 to 13%. So ouch, feels bad. Feels bad, man. Overall, crypto is bleeding 5%, much like a lot of the stocks. So as much as we would like it to be a uncorrelated asset, it is quite correlated at the moment. As we recall, when Bitcoin started trading, it went down. It was buy the rumor, sell the news slightly, and then it shot up almost 100% following a couple of months. So Ethereum just started trading. It is not the same asset, but we can look for this as an example of what could possibly happen. All right, on to the first one. SoFi. SoFi reported earnings here. It was as expected. The price shot up from 730, 720, whatever this was, to 780, and now it's back below what it reported. So market just gave it back. Possibly once this resolves overall market turmoil, it'll go back up. PayPal reported here about 20 cents beat to the estimate, 20% surprise. It went up from 62 to what is now 65. AMD. Now this is one we're keeping a close eye on because this is the only real competitor to NVIDIA, and NVIDIA has been crushing it. So their estimate was 68, they reported 69, and the price went up from 144 to 152, and now it's at 135. Perhaps an opportunity to pick some up because investors saw it as good earnings, and whatever they reported in their shareholder letter that was promising, but then there were a lot of revisions by price analysts, which is not the best if they were all lowered. Some raised, some lowered. Anyways, trading lower than when they reported. 130, still a little rich, but better than 150 if you were looking to start a position. Next up, Microsoft. Microsoft reported earnings pretty much in line, slight beat, a couple of cents, about 1% surprise. It went from under 400 up to as much as 427 before giving some back to 418. Next, we have Starbucks, and the reason we're looking at Starbucks is they sell an addictive product, which is quite interesting. As expected, no surprise, 93 cents per share. Stock went up from 77 to 80, and then now in a sell-off with the rest of the market, it is to where it was before the earnings week, about 74. In the last 52 weeks, it's been as high as 100, so this presents about a 50% upside if it was to retrace back to where it was. Has a dividend of about 3%. This is an interesting, stable company, but Starbucks does suffer when the economy doesn't do well, and if the bond market is signaling a recession, perhaps people will cut down on their spendings and they will not spend $7 to $10 on their latte every day and make it at home for 10 cents. We'll see. Next up, Pinterest. Pinterest reported a slight beat, but the stock sold off anyways. It was about 37 prior to reporting. It dropped down to 31, and now it's trading at 32. We'll have to look at this one a little closer. Possibly an opportunity to reopen a position. As of now, we don't have any more. Pinterest shares, P/E ratio is quite rich. I think there's a lot. It's an interesting platform. I like to use it for inspiration for my art, as you may see the art behind. But I feel like they are botching execution of their app, and they could fix some things. I'll have to read the shareholder letter, and I'll let you guys know if I decide to reopen a position. Next up, Meta. Meta popped off after reporting earnings. There was a slight beat of 9%. Expected was $4.73 a share. They reported $5.16. And the stock popped off to $5.25 before giving back some back to $500. Let's see. P/E ratio is reasonable. They're crushing it, delivering on all cylinders. Plus, you get yourself a little bit of a dividend, which is kind of silly, but why not? We like it. We're keeping it. We might actually buy some more. We like Meta. All right, ARM. Let's get into the chip game. Chip. ARM beat estimates and the stock went down. What are you going to do? Right? The reason this happens is you may report better numbers than expected, but if the guidance is weak, saying going forward because of the economy or what you're seeing in future orders or how your sales team is doing, that the future is not looking good. This could be true for a lot of these companies that report a beat but then go down. Possibly presenting an opportunity to open or start a position because it is $30 cheaper than it was a week ago. So if you were interested in ARM because they produce chips, you want your chip game on, let's go. Qualcomm. 190 down to 165 after reporting a beat of 3.5%. Again, this is probably guidance was weak because they're seeing softness in the economy. These are just leading indicators that will tell us that the economy is not as hot as we think it is, and it will actually lead to a lowered interest rate possibly in September if things are starting to break. But a lot of upgrades to about $200. Yeah, not a bad thing to do. Much cheaper than it was a week ago. It is down to where it was in May. So when could you have bought this cheaper? In April briefly or anytime before the AI boom. Next up, the best performing short squeeze stock on our list. As you can see, we recommended it at $45 as a short squeeze opportunity. It is now $145, crushing on every account, crushing it. They thought they're going to lose money. They're like, nope, we're making money. 300% earnings per share beat, reporting a profit of 14 cents per share. Now, this is a really interesting one because of this little fact tidbit right here. 20% of shares of float are still shorted as of July 15. This tells you that there could be some more squeezing on the way. Next up, Amazon. Now, hasn't reported yet because that's today after the market closes. Amazon, Apple, Intel, Coinbase, but let's just look through them, see how the market is reacting before they actually deliver. So Amazon is down just with the rest of the market, but we'll see what happens after they actually deliver. Amazon has been as low as this, never. I mean, as high as this, never. So it's pretty top of its range. I would be open to picking some up closer down here before they're split, maybe 150. If there is weakness in consumer demand, perhaps this will be true, but AWS is probably going on strong. Next up, Apple. This is just a big company I have no interest in. I have no shares. Next, Intel. As I mentioned earlier, Intel is pretty cheap in the last long time. In a long time. This is as cheap as Intel gets in the last 5 years. So once they start cranking out chips from their fab in Arizona and Texas, I expect it to pop off. I may pick up some more Intel shares and options because this is looking promising. Intel has been battered by AMD just eating their lunch. And given how well NVIDIA has done, there is a lot of opportunity for Intel to come and disrupt both Taiwan Semiconductors by being a fab, but also by both designing and producing their own GPUs and CPUs and also fabricating them. So they're a trifecta. AMD and NVIDIA, they only design chips, but then Taiwan Semiconductor makes them, where Intel has their own fabrication plans. They can both design and make them. Some have argued that it is the reason NVIDIA and AMD are doing so well is because they've outsourced the manufacturing and are just focusing on designing the best chips. Perhaps Intel can take market share from both AMD, NVIDIA, and Taiwan Semiconductor at the same time by having a more integrated vertical stack. And now, the piece la résistance. Coinbase. Not looking good today. Selling off with the rest of the market. As I have done in my earnings preview, I have shared with you early enough for you to know that the earnings are likely not going to be great. About 1.3 to 1.5. So 1.4 billion in revenue, overall profitable and good, but less so than the previous quarter when Bitcoin and other cryptos were hitting their all-time highs, where Bitcoin was 75,000. Was it 70? 74,000, 75,000? Now it's 64,000. Coinbase makes a lot of their money from transaction revenue, and this is a percentage of whatever consumers and institutions are trading on their platform. Higher the prices, usually there's more volume, and Coinbase takes more money. The other transactions is their layer 2 base, which is really cool right now. Coinbase L2 base hosts 80% of Uniswap activity from traders. So even though there is a decentralized exchange, the most popular one, the most used, Uniswap, 80% of the transactions on Uniswap are now being done on L2 base. So even though you may not be trading on a centralized exchange where Coinbase captures some of that value, they're capturing value from you using a decentralized exchange like Uniswap or any other one because they have the best L2 on Ethereum as of now. That is really, really interesting. And the other transactions here I have at 50 million. This is probably going to be 32 million. I'll have to revise that down. Let's increase. I am expecting a 15% decline in revenue from Q1, which is at $250 million less. Revenue will come into about $1.3, $1.4 billion, which is not bad, resulting in net income of about $260 and about 91 cents per share on the $1.384 billion revenue. One thing that I think I will need to revise here is L2 revenue. The reason L2 revenue is going to go down from Q1 to Q2 is because there was an upgrade to Ethereum where layer 2s pay much smaller fees through something called blobs. Never mind, something technical, but it's an Ethereum network improvement that reduces costs across the board. And Base is passing on those savings to users, and that's why they're seeing such an explosion of users. Additionally, lower fees result in more available use cases. Sometimes things are not feasible at a 10 cents per transaction cost that might be if the price per transaction went down 10 times to 1 cent, which it is now on Base. As we can see, crypto market is down 5%, pretty much like a lot of traditional markets, at 2.26 trillion in the neutral fear and greed index. Bitcoin is down 3% for the week. Ethereum is down 2%. Solana is down 6%. Other crypto-related companies that are reporting this week is Square or Block. It is down from the high of 63 down to 61, pre-reporting their earnings. And Marathon Digital is down also because prices is down. If you are mining Bitcoin and Bitcoin price goes down, then the thing you just mined is worth less. Same as if you were digging gold and you get yourself a bunch of gold and now the price of gold is down. Well, what you dug up is worth less. Pretty similar concept. It is down 18%, down to 18, down 6% in the last 5 days. Let's see, where has it been? It's been as high as 49 in the 5 years, as you can see. Whoop! And then the crypto winter. And now it's starting to ratchet up. Perhaps we can see a bounce back. Next up, Mercado Libre. For you not familiar with Mercado Libre is a basically Amazon of Latin America. They're headquartered in Uruguay, and they do more or less a lot of things that Amazon does. Fintech company that provide payments, logistics, warehousing, online marketplace, lots of stuff that are similar to, you guessed it, Amazon. Now, the PE ratio is a bit high, but they're growing really fast. Let's check out their stats. So, market cap steadily growing. PE is actually declining. Price to earnings growth, I mean here, come on, this is real cheap right here. Now it's a little more expensive. I mean, beautiful. Operating margin, return on equity, revenue. I mean, this is just a pristine income statement, a beautiful balance sheet. What do we got? We got anybody shorting this? No, because nobody's crazy to short it. So we'll be taking a look at their earnings once they report. We expect much of the same because they've been executing and growing steadily. Market gave back 4% today, just with the broader market sell-off. In the last 5 years, you could have picked it up for half the price. Oh, here, in 2020 at 400. Wow. All right. So it's cheaper than it was historically at its highs. Not as cheap as it was a year ago. And if they sell off, might be worth looking into picking some up. We don't really care about Exxon, Chevron, and all these others. Possibly they'll go down because oil went down. And lastly, I just calculated how much money Coinbase made in July, and it looks like they made about $165 million. This is relatively low, which tells us that Q3, unless the next 2 months quickly pick up steam, will be an even weaker quarter than Q2. So, about $165 million of transaction revenue. If everything else stays the same, then we can expect this number here to be about 500 or 600 million instead of 7 or a billion, if things stay the same. Now, it's been a quiet summer, and things may pick up steam in the next couple of months. Usually, Q3 and 4 are much stronger than Q2. That is most of the exciting companies that we are interested in, especially Coinbase. We're going to wait next few hours before the report, before we start doing additional analysis. As I mentioned, the Q3 July numbers don't look that great, not terrible, but also they could be a lot better. There has been volatility with the ETFs and prices going up and down a lot. Up and down means there is trading volume. Somebody's buying, somebody's selling, and there's Coinbase in the middle saying, hi, can I have some of your money? So volatility is good. Prices going up are even better. We can look forward to improvements in market cap of all of crypto going into Q3 and Q4 as political winds have changed. The Republican Party seems to be very pro-crypto at this point, and the Democratic Party is just shooting themselves in the foot by being against technology for no reason. It's an easy slam dunk for most people that are leaning left, that are also in crypto, if they just throw them a bone. So far, the ETF approval of Ethereum has been one good wind change, and we can look for more. Hopefully, Kamala Harris can come out and say she is pro-crypto, unlike Biden. This could also rest largely on whoever her VP pick is. Hopefully, it will be somebody that is pro-crypto that will help out her campaign and get the left-leaning voters that are in crypto not to vote for somebody else if they are single-issue voters. But as you know, I am supporting RFK Jr. because he came to ETH Denver. He is very pro-crypto and, in my opinion, the best candidate for the job and also for our bags. We will do a in-depth analysis of the Coinbase shareholders letter once we read it and analyze it. Hopefully we'll have that for you nice and early tomorrow for your viewing pleasure to make decisions on Friday whether to trim or add or just hold your Coinbase position. We don't plan to do anything drastic with our portfolio from any one earnings report. If anything, we will likely add if the price drops further, because there are a lot of positive tailwinds for the crypto industry and the wind change with the politics that look promising going into 2025. Thank you for tuning in. If you would be kind to like and subscribe, it really helps out the channel. And as always, may the force of compound interest be with you. Peace.
Peace.